So we're here talking with Denise Webster. She's a mortgage broker with Dominion Lending Services Modern Mortgage Group, and very active in our CFAC show, the Whole Home Show with Tony Joe. Wanted to talk to Denise today about the mortgage changes and this whole stress test thing and what's going on, because there's a lot of confusion, there's a lot of concern, people are scared a little bit.
Well, and the stress test has resurfaced, right? Because last October was the first stress test that came out, and that was for our buyers with less than 20% down, now qualifying at the Bank of Canada's benchmark rate. So that put on a little bit of pressure. It was a little harder to qualify.
But the whole idea is the government wants to put controls in place to know that if the interest rates go up, then people can still own their homes, right?
Correct.
So that's not necessarily a bad thing.
It's not, and it might give the buyer a little more reassurance that, hey, we can still afford this even if our rate went this high.
Yes.
Correct.
Yeah. Now, you are dealing with people who are getting their mortgages, and what are they feeling right now?
Well, if they're closing their mortgage after January, they're really scared they may have to requalify. And that's something we really don't know yet. That has not been released, of if they're going to have a grandfathered date that you qualify under the rules right now, or if after January 1, everybody's qualifying under this new stress test.
Yeah, because they're talking January, so the stress test will happen, right?
Yep.
But it's
definitely happening.
But it's just a question of when is the transition date going to be?
Correct. Right. So last October, when the first stress test came out, we had a date that if a contract had been written before October 17th, I think it was grandfathered in the old rules.
Yeah.
And so if you had that contract and your mortgage or your purchase didn't close until the new year of 2017, it didn't affect you.
Okay.
So that's what has not been released right now. So right now, here's a great example. I have first-time home buyers. They bought a brand new build. They've removed
not going to be
conditions.
finished for a while, right?
Not till maybe April, May 2018.
Okay.
So I have the approval.
Yeah.
But even the lender themselves cannot tell me if they will have to requalify under the new stress test. And let's just talk about what that is.
Yeah.
So the new stress test is just that anybody who has now 20%, it's an equal playing field.
Not just the first timers, not just people with less than 20%, anyone.
Exactly, we have a level field now.
Okay.
So anybody qualifying for a mortgage qualifies at the higher of either the Bank of Canada's benchmark rate, which is currently 4.89, or their 5-year fixed contract rate plus 2%. So right now we're seeing fixed rates 3.5%, plus 2, they're going to be qualifying at 5.5.
So it's the higher of the two.
The higher of the two.
Okay, so it's important to know that doesn't mean that your mortgage is going to be 5.5%.
No, it's still going to be calculated at that 3.5%.
Yeah, they just want to be able to make sure that if they did go up, that you could still afford to own the house.
Correct. So if you take a qualifying mortgage payment, that's the payment we put into the application to see if your income debt services that mortgage payment at the higher rate.
Okay, so when people now have to qualify at the higher rate, whatever it is, 5%, 5.5%, what does that do to their qualification?
It really restricts their purchase power to the tune of almost $100,000 for some borrowers.
Because we were talking like 20%, right? So somebody could qualify for, say, 600,000.
I'm calling them and saying it's now 500 if you're writing a contract after January 1st. And again, I still don't even know if that's accurate on the dates. But right now we can assume if you're writing a new contract in 2018, you've already fallen under the new rules.
So here's the thing. I was talking with somebody earlier today, and he's a seller, and he was worried. He's like, well, does this mean that prices are going to start coming down?
That's the big question.
And that's a big question. And the way I see it at this point is, I don't think we're going to see wholesale reductions in value, because the fundamentals in Victoria are what they are, right?
Yeah.
I think what's going to end up happening is the people who could afford right now a $1 million house will start looking at a lower price point.
Correct.
Because that's going to be their option. Like if they want to buy a house, unfortunately they can't buy the $1 million anymore. They're going to have to buy it $800.
Yeah, I cannot see our Victoria, our Vancouver, our Toronto markets changing by hundreds of thousands of dollars because of this rule, which I think maybe they hoped would have a correction in the market. It's sad that this is my opinion, but when you think about smaller towns in Canada and these qualifying, we may see those that hurt a little bit more of smaller towns in Canada, because this was, my opinion again, this has been really designed because of what's been happening in Toronto and Vancouver.
Yeah, well, that's funny. You talk about Vancouver. I mean, the foreign buyer tax was implemented last year. It was meant to control prices, and prices are as high as they've ever been. So
there will always be some cash buyers. There will always be some foreign buyers. There will always be people that will still qualify.
Yeah. So yeah, it's a very interesting time, and I guess what you're saying is we don't know all the details right now.
We don't. So you've got to be talking to your mortgage broker or your bank, and keep checking in. If you've already got a contract in place, a purchase, but that's closing in the new year, you're really going to want to know how that's affecting you. So myself, my buyers that have qualified, we're giving them a heads up that this could mean you may need a cosigner.
Okay. Yeah.
So that will always be the case.
Or find more down payment money.
Well, yeah, a little bit to lower that mortgage payment.
Yeah.
The biggest difference between that down payment, what we saw was you're paying an insurance premium less than 20% down, no insurance premium, and a 30-year amortization, making that payment a little bit smaller.
Mm.
But the playing field is level now with everybody doing the qualifying at the higher rate.
Okay, well, all really important stuff. Again, speak to your expert, like Denise says, speak to a mortgage broker, speak to Denise. Her number is right down below here. Thanks very much. It's always important for us to keep up to date with all the new things.
Yeah, and we'll keep you tuned in. We'll keep you informed as rules get a little bit more fine-tuned, and we know some dates when these are going to be a hard, effective date. We'll let you know.
Thanks.
Thank you.